New lens, business expense. Champagne rep party, maybe not. Let's decode what the real write-offs are for filmmakers. Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
So what even is a write-off?
So really the basis of a write-off is you receive money, but in order to fulfill that obligation or the service or product, you have to spend money.
Okay.
So instead of the IRS taxing you on the money that you receive in full, you're able to subtract all of the costs that were associated with providing that service. And then that's how you get to your taxable income. So all of these write-offs are bringing you closer to your taxable income. And that's the dollar amount that the IRS will use to base how much they charge you in taxes, kind of what your tax bracket is and everything like that.
Okay, but like as a normal person, like how do I know like what the rules are for this? Yeah, like how do you even know?
Yeah. So we like to start off, I mean, there's so many rules for everything, you know?
That's fair.
But I like to start off with the Taxpayer Bill of Rights. And that's something that a lot of people don't know. I mean, you know, the normal Bill of Rights and the Constitution and everything like that.
Okay.
Yep, you heard it in social studies once.
A long time ago. Yeah.
But the IRS also has their own version of the Taxpayer Bill of Rights, and it's really what your rights as a taxpayer are. And so there's a whole list of items, but I really want to focus on you have number one, the right to pay only the correct amount of taxes. So the IRS isn't out there to overcharge you. They're just identifying what the true tax liability for you and your business actually is. And then also, especially as the industry changes, you have the right to challenge what the IRS says.
Really? Okay.
And be heard and be able to provide a different point of view and a different opinion on how to interpret some of that tax law. So while there are a lot of rules and generally the IRS is going to try to make sure that they win because they only want to fight fights that they think they can win.
Yeah. Okay.
You do have the opportunity to say, hey, I don't think that you're correct and this is why. And the IRS does lose. So, but in order for that to happen, you have to have a strong position. And, you can't just willy-nilly say like, well, because I don't believe you or because I don't want to, So now that's where we get into what actually is one of those write-offs.
Okay.
And how do we position ourselves so that if we are needing to challenge the IRS, we have all of the information that we need to have a successful outcome.
Okay. So I guess like if we take it back to like the first steps, what does the IRS even like consider a business? Like what is a business to the IRS?
Yep. And I like that you bring it up because, people say business expense, but you really have to look, number one, is there even a business there?
That's fair.
So, so especially a lot of things in film are born out of our passions and what we love to do and kind of who we are as a person. So that's where sometimes it gets a little bit gray and especially as things turn more lifestyle. So I like to say before it was mom and pop shops, you had a brick and mortar. So it was really easy to identify what is a business expense, all of that fun stuff. But as we're going virtual and we're focusing more on lifestyle and businesses and needs, then it kind of gets a little bit gray. So number one, we want to first identify, like you said, what actually is a business. So the IRS says a business is something that you do to generate a profit.
Okay.
So the business doesn't necessarily have to make a profit every single year, but you have to be able to show that you are making effort to further the business.
Okay.
So, I mean, especially for film production, in those first couple of years when you're in pre-production and production and post, you haven't released anything yet. So those years you're always going to have losses. But during all of those phases, you are working towards an end goal where you would be
making money.
earning money.
Okay, yeah.
If you're writing a script and you're spending time writing a script and you're doing all of the research, at the end of the day, you're going to sell the script and you're going to get income because of that script. Versus if if you take a research trip and you decide to go to Bali and you write the script, but then there's not really anyone that's asking for the script and you're not really trying to show the script to anyone, then the IRS would kind of come in and say, okay, well, maybe that's just a hobby at that point in time.
Okay, so overall, the goal has to be to make money in order to be considered a business. If the goal is just like, I like to do these things, we're in the hobby territory. Okay.
So,
that makes sense.
And like I said, even if you're not making money initially, that doesn't necessarily negate that you have a business. You just have to be a little bit more aggressive in your documentation and what you're actually showing them. So things like keeping track of your contacts and, potential contracts that you're in and different things like that show that you're actually working towards something. And maybe a contract falls through. That's totally fine. That happens all the time. But, you would still need to be making continued efforts to get it shown somewhere else.
Okay.
And continue moving forward. So that's kind of a business. You want to make sure you're doing something to earn money.
Okay. I like it. That makes sense. Nice and simple.
Right.
Yeah.
And then for an expense, in order for it to be a deductible business expense, because the IRS doesn't fight that it takes money to earn money.
Yeah.
They just fight whether or not you can deduct it off of your
Taxes.
income.
Oh, your income.
Yeah,
Okay.
for your taxes.
Okay.
So for it to be considered a tax deduction, it has to be ordinary and it has to be necessary, which again is one of the weird
It seems kind of
IRS.
vague. Like ordinary and necessary. Like, what does that mean?
Right.
Yeah.
So ordinary means that it's something that's pretty common in your industry.
Okay.
And then necessary means that it is not necessarily a requirement, but it is something that furthers the interests of the business. Okay. So, a business it should have a goal. Even if it's not explicitly stated, you have some sort of goal, some sort of direction on where the business is going. So whatever your purchase is, it should be matching up with that goal and helping you get to that same place. And so every business is going to be a little bit different. And that's why in film and, costume design and, production, it gets a little bit trickier because again, like I said, it's different than if you are running a 7-Eleven.
Yeah. Yeah.
So I want to kind of go over some weird things.
We love the weird.
Yeah,
Okay.
yeah. And that tells you to kind of help show some of the nuance of the situation and how you should be thinking about it. So a couple of tax court cases, because there is like a special court inside the IRS.
It seems like it. Yeah. It seems like it works.
Yeah, little fun things. So these are famous cases that came out. Some of them are a little bit older, but there was a case where a couple was managing multiple properties and they had these large condos and they were using a private jet to go from one property to another. Okay. And the IRS accepted them using a private jet because the amount of time that they were saving from being able to use their own schedule, not relying on regular
like
airlines or driving. And the idea there is, again, it takes money to make money. So if they were able to use a private jet to be able to manage 2 more properties because they didn't have to drive in between, like a 10-hour drive in between all of those. They were able to just jump on a plane whenever they need, take an hour flight to the next one. That was able to increase their income, which then increases their profit and increases the amount of money that the IRS was able to tax. So that's a situation where...
So the IRS said that was okay.
They said that it was okay, that they were paying for their own private jet.
Interesting.
Even though those are very expensive.
Yeah.
But by having that expense, they were able to multiply their income pretty significantly. And they were saving so much time by being able to have their own schedule there.
So what about stuff like cosmetic surgery, which typically wouldn't be, right?
Right.
Yeah.
Right. So, and it'll get interesting to see how that kind of goes. There's more in front of camera talent coming through, but cosmetic surgery is always a thing, because when you can use something for both personal and business use, you're supposed to break it out between what percentage you're using for the business and what percentage you're using personally.
But you with that,
with your teeth, how much. So in a lot of those cases where it's not clear, they don't allow you to expense it at all. So it's like with clothing, because you can use those clothes outside of the business purpose, they're not going to allow it.
Okay.
In a lot of cases. So the same kind of thing happens in cosmetic surgery, but there have been cases where people have gotten cosmetic surgery. Like there's this really famous one who she got a breast augmentation and it was like huge, but she was able to show that she had medical issues because of this cosmetic surgery. She had all kinds of back problems and everything that you would expect.
Yeah.
So her argument was, I only did this because this is what helps me earn money. Okay. It is like it is a detriment to my health. It causes me physical pain, all of these things. So it's not a choice that I would normally make in my everyday life, but because of the work that I'm doing, it is a requirement. And that's how I'm able to make more money, is by having this,
that is interesting.
This surgery.
So like with these cases, it does seem like they were able to prove that they were like a necessary, ordinary, what was the phrase? Ordinary and necessary expense?
Yep.
Okay.
Yeah.
Okay.
At least they were able to show that it was necessary because it furthered the interest of the business. And without these items coming into play, they wouldn't have made as much money as they actually did.
Okay. So I guess that kind of goes right into like the showing of the proof. Like what should filmmakers do to like be able to prove to the IRS for certain expenses that might be in that kind of gray area?
Right. Like clothing and props and things
so
like that.
So how does that work?
So a lot of the questions are going to be the same no matter what industry you're in or what your specialty is. So you want to ask yourself, number one, how does this item create more income?
Okay.
So that's going to be the big thing. Because like I said, it takes money to make money. So how is this item actually making me money? And then also looking at what are the goals of the business and how does this fall in line with those goals?
Okay.
And then also you have friends that are doing very similar things, or you have opportunities to be a W-2 employee and work for someone else. Would they also make that same decision? If you were working for another company, would they still buy all of those same items? And if that's true, then you know that that's going to be an ordinary expense because it is industry standard for this to happen. So an example would be like a guard dog at a junkyard.
Yep. Okay.
It's pretty common to see, I mean, that's a whole, like trope.
Very much so.
And then you also covered that necessary by saying, okay, this is going to earn my business money, and it's also going to help me achieve the goals of the business and the reason why I'm working so hard. So that's really how we identify whether it's ordinary and necessary.
Okay.
And then, making sure that you're documenting these items. So that's where bookkeeping comes into play, because you're looking at every single transaction and making sure it goes into the correct bucket, because that's also a thing is when the IRS is doing an audit, normally they're looking at the bucket. So they're going to say, give me all of your meal expenses, give me all of your office supply expenses. And if things are weird, so if you have a meal in with your office supplies, they're not going to say, we don't believe that you need to eat. They're just going to say, this is in the wrong category, so we're going to reject it. You know, so making sure that everything is categorized and is telling the actual story of the business, that's going to be very important. And then even little things like you can save receipts. You can just take a picture, send it over to like a Gmail account that's only for receipts. So you don't have to worry about keeping track of them or what have you. They're just all kind of in this black hole of all of your receipts.
Yeah.
QuickBooks has a function where you can download an app and you can take a picture of the receipt and it'll automatically attach itself to the actual transaction, all kinds of fun stuff. So there's a lot of easy ways to be able to keep track of the expenses. Also on your calendar, I mean, your calendar will say like, I had lunch with Joe or something like that. And then you can see on your credit card that you spent the $200 having the meal with him. And that's going to help them identify whether or not that was a meal with a client or, you know, something a little bit more personal, all of that fun stuff. But especially in the film industry, and like I said, like for a costume designer, sometimes you go to Target and you buy things that are normal items for another person or like a set designer, something like that. Making sure that you're not what we call co-mingling your purchases.
Yeah.
So, you know, if you are going to Target and you're purchasing props and you're purchasing supplies or you're getting water for the crew, make sure that that card that you're using is always for the business. If you're mixing some personal and some business, it's going to make it very difficult for the IRS to determine what actually is a business expense. And they just don't have the time and the resources to walk through every single time you decided to buy, you know, like bread along with some of your supplies and things. So when they see that there's a mix, they just take all of it away.
Oh, they'll just say everything's personal.
Everything's personal.
Okay. So very important to like keep separate business expenses separate of your personal stuff.
Right.
Okay.
So if you go to Costco and you're buying all of, you know, like craft services and snacks and things like that, don't add your dog food onto the order, because the first thing the IRS is going to do is say, okay, give me 3 of your Costco receipts. And if I see like a bath rug and a blanket and dog food, then
all of it's personal.
All of it's out.
Interesting. Okay.
So being like very clear, especially in these areas where you could see just a normal person going to that place to do.
Okay. So I guess then that kind of leads, because there's like, just with the day and age, there's even more gray areas where a lot of people like work from home. So like a filmmaker might be doing a lot of the editing and stuff like in his home. And I know that there is things like business use of home, but like, how does that really work? Like, can you claim your dining room table like space, or like, you know what I mean? Like, what do you do?
Yep.
Yeah.
And that's a great example, because a lot of times when you're in like LA, it's very expensive
to have like an office. Yeah. You make it do. It's expensive to live. So,
Right. Yeah. Unless you're in one of the rent controlled apartments, you know, you might end up having roommates and things like that. So when we talk about business use of home, a lot of people know about it, but sometimes it's either misapplied or just too hesitant because you don't really know what all to take into consideration. So really, when they say business use of home, it has to be exclusively used for the business.
Okay.
So kitchen table, you're also going to be eating dinner there. So that's out.
Yeah. Okay.
You know, so it has to only be used for your business, but it doesn't necessarily have to be the entire room. So let's say you have a kitchen area, maybe you can't claim the kitchen table itself, but if you have a desk in the corner, you can map out that footprint that you're actually using, and then that counts. So it doesn't necessarily have to be, I'm gonna get a 2-bedroom apartment and one is gonna be my bed and one is gonna be my office. You can still use your living room, have that 1-bedroom apartment you can afford. But you would just only allocate the exact space that you're using for your business. And you can't be like, oh, sometimes I work outside, so I'm going to claim my balcony. No.
Okay, so no balconies.
Only the spot that you use for the business. And then from there, we take the total square footage of your home, and then we have the square footage of the space that you're using for business. And then we create a percentage and we take into account your rent if you're renting, or if you own the home, it would be your interest and your property taxes. Then we have your insurance.
Okay. And it would be that percentage that we had calculated already. Nice. Yeah. So like things like the utilities and stuff, we could take a percentage based off of where that would be. Okay.
Yep. Right. Yep. You got your AC repaired. That comes into play as well.
Cool. Okay.
So it's all of the costs of the property and all of the upkeep and everything like that. So those are going to be all of the indirect expenses.
Okay.
Direct expenses sometimes come into play. Like if you did have a separate room and you decided to paint it because you want everything green to be calming so that you're not, that would be at a direct expense, and you could take all of that.
Okay.
But when it comes to, like you said, your electric bill, your water bill, gas,
internet, okay.
It's all going to be that percentage based on the square footage. But one of the things that I also want people to think about is it's not necessarily only the desk that you're sitting on.
Okay.
So when you're doing the writing or the editing or scheduling everybody for production, it's also storage for all of your gear.
Ooh, that is a good point. Okay. So storage can be counted as well. Okay. So if you have like a pod in your driveway, it's like all that, or like even a storage center, like space?
Yes, but in your home. So so the storage, so you're using your closet.
Oh, you can count that. Very cool.
So again, you want to make sure that it is like a dedicated space that you're using pretty frequently. You can't say like, oh, on Tuesdays I put my camera here, and that's but there is a lot of gear that is heavier. Sometimes you want it to be closer to you, because I've seen where storage units have gotten broken into and things like that.
I got you.
So putting your gear in a closet, or sometimes you have your garage, and then maybe you put like extra cameras around your garage and a better security system, all of that fun stuff. So all of those count as business use too.
Okay.
As long as you're using it pretty regularly, and that's like basically the main purpose of the space, is to store all of your gear and things that you need.
Okay, so I mean, that seems like reasonable proof if you had to prove that. Like that's not crazy. It's like you have a designated area for all of your equipment. That's really cool. So it's not just a tiny desk. It could be there could be other things.
Right, yeah. Yep, there could be other things. And again, we want to make sure that it still is reasonable.
Okay.
Like I said, like getting a security system, because you're going to put it into your garage. That's totally fine. But you don't want to like go crazy and, try to have a guard dog for your camera lenses, maybe that's not going to be as that'll be ordinary.
Okay. All right. No, that's cool.
Depending. And then that also brings up another one of the major items, which is the business use of car. So everybody always talks about that when you use your car. So you have to be a little bit careful. A lot of times business use of car comes into play when you're going from the first location to the second location.
Oh, okay.
So your regular commute doesn't count. So
I guess that's fair, because like if you had a W-2 job, you don't really get business use of car to drive to the office to work. Okay.
Right. But if you have to take your car from that office to another office, then normally your employer would like reimburse you for this extra mileage that you're having to do, and running errands and stuff like that.
Okay.
Yep. So same kind of category there. With business use of car, I know it can be really difficult to keep track of what's going on. And so it's a good place to reiterate that the IRS doesn't necessarily need exact proof. Like you don't need to videotape yourself driving these 3.5 miles,
Okay, that's good.
Yep. What you can do is you can use other methods to provide them with a reasonable estimate.
Okay. So how do you do that?
So sometimes if you aren't keeping track, really super religiously, like ADHD, creative brain, what you can do is you can use things like your oil changes.
Okay.
Because every time you get your oil change, they'll say
sticker, right?
What the odometer says, the odometer reading. And then also, like I said, again, your calendar, because a lot of times your calendar will say who you were meeting and generally where you're supposed to meet them. And then that will help you backtrack into what some of your mileage is. And as long as it's a reasonable estimate, then that's perfectly fine. You don't have to be like to the T within like a quarter mile of what you actually did.
Okay.
And so obviously the more information you can provide, the better. So using those apps where you just like press the button and then you stop the button, those are really, really great. But if you're just not in the mindset to do that, there are other ways to get it.
That's good.
You just can't say like, oh, I think I'm going to estimate 20,000 miles. And then when they look at your odometer, like you only drove 10,000 miles based on your oil changes, you know?
Yeah. Okay.
So that's where it still has to be a reasonable estimate that can be allocated. And especially in a lot of those cases where it's something that does need documentation to support it, it's better if you are doing that as the things are happening versus providing it to the IRS when they ask for it. So,
gotcha. Okay.
So when you're in an audit, the IRS knows that you are always going to paint yourself in the best light possible.
That's fair. Yeah.
Right?
Yeah.
So you're always going to sway things onto your side more often than not. But if they ask you to provide mileage, you don't have anything, so then you decide to like kind of go back and get things ready for them, they're going to take it with a grain of salt because they know that you're trying to portray yourself in the best light as possible. But if you're able to provide them with like, okay, well, here's my notebook or here's my tracking system, like in every single meeting, I put the name of the person, I put the location, I do all of this stuff, and that's how I get to it. You have the documentation, you were doing it before anybody asked you to. There was really no ulterior motive in that situation. You're just
keeping records.
Right.
Okay.
Right.
Yeah.
It's just data that you're collecting at that point. So then they'll take that a little bit stronger.
Okay.
Than if you come to them and you say, hey, well, I don't really know anything and I don't really have a system, but let me just try to, like, here's what I think at this point. They're going to say, okay, well, you're going to think that it's in your favor more.
Yeah. Okay. I mean, that makes sense. So like good practices are separating out business and personal when you're actually purchasing things. So like making sure you have a designated account or just like a very separate card for business expenses versus personal. Keeping track of things, just being a little organized with it of just like, this is where things are and all that jazz. So that way you can, if ever being asked, you can just present what you've already been doing the entire time. I mean, I like that. I love a little good organization. And then some like workarounds if you're not the greatest at keeping records and whatnot. And then what you may need. Okay, cool. No, that's really awesome.
Yeah. Because like you said, it doesn't necessarily have to be, like this perfect, super exact item, but you do have to have some sort of system and be using that system in order to get to that number in a repeatable way.
Okay. That's fair.
So,
okay.
Yeah.
And then also working to make money.
Right.
So, yeah.
Yes. Yep.
Okay. All right, cool. I mean, that does seem reasonable. So, yeah.
Yep.
If you have a business, work towards actually making money and then also just keeping track of all the stuff that you do.
Yeah. And so, like I said, a lot of times the IRS doesn't deny that it takes money to make money. It's just being able to show them that it falls within their qualifications of what's ordinary, what's necessary. Because, I mean, you can be a hairdresser and you can pay $2,000 for golden scissors, and the IRS won't deny that you did that. They'll just deny that you had to do that.
Gotcha.
So when you're fighting with the IRS, it's not necessarily about proving that this thing happened. It's proving that it was the right decision for you and your business. That's going to be the argument there.
Okay.
So if you have any more questions about maybe specific business expenses or use cases, feel free to drop a comment below or reach out to us via email and have a consultation. And we are happy you joined us. We'll talk to you soon.
Bye.
That's a wrap on Let's Get Fiscal.
Ready to stop guessing and start saving? Click the link in the show notes.
Grab your consult and let's make your business work for you,
not the other way around. You've got this.